Good afternoon, everybody. Let's make a quick sound check. Let me know if you can hear me. Great. So, welcome to a Sunbird Effects webinar about managing a trade according to money management basics. My name is Bastian Rubin, and I'm the chief analyst at Sunbird Effects. I see many familiar names here. This is my seventh webinar at Forex Pros. This is my seventh webinar at Forex Pros, and today we are talking about managing a trade according to money management. Those of you unfamiliar with me or Sunbird, Sunbird FX was established on late 2005 and serviced the institutional market among our clients, and still today are hedge funds, white label, brokers, dealers, and so on. On 2010, the company made a strategic move and decided to approach the retail market, but with the offering that will suit institutional. Um, as you can hear, English is not my mother tongue, so let me apologize in advance if I have slips here and there. All right. So this webinar deals with what I think is the most important thing of trading. It is important for all kinds of traders. Beginners or experienced have to follow the money management rules. Many traders tend to think that all they need is just a good system or high level of technical analysis. But let me blow this bubble by saying that knowing how to control the moving averages or calculating the RSI will not help you to achieve your main goal, which is obviously taking profits on a daily basis. If you want to earn money in Forex, you have to respect the money that you are trading with and fully understand the meaning of putting your money in the markets. Those who really feel their money and treat it right are the real professional traders. In addition, wise money management can help you close the day in a green territory even if your statistic is not impressive. For example, the other day I made something like 4 trades during one single trading day, and I lost 3 of them and I won just 1, which is something like 25% of success, and it's pretty lame statistic for a professional trader. But in spite of that, I closed the day with money in my pocket, and the reason for that is pretty simple. I lost about 20 pips in each losing trade and gained 120 pips on the single winning trade. So all you have to make sure is that you cut the losses while they are small and let your winners breathe. This is something that will follow us along this webinar. So if you have a good money management skills, sorry, and you know how to deal and treat your money, you can win the market. Technical analysis or any kind of forex trading strategy is no more than 20 or 30% of the way to successful trading. 60 or 70% are mentality and money management. All right. So one of the most important things that you have to know before you enter the trade is what size you should use for this trade. In general, I like to keep a constant size for most of my trades. I usually, for example, from my personal point of view, I can say that most of my trades I use one standard lot per trade, because, well, I will talk about later, but this is something around one standard lot. All right. So why do it? It makes it easier to manage the trades and calculate profits and losses. Now, the first thing you have to do is ask yourself a very important question, which is, how much money am I willing to lose per one trade? How much money am I willing to lose per one trade? Obviously, the answer for this question varies from each trader, and it depends on your balance and all kind of things, but it shouldn't be more than 2 to 5% of your total cash. After you figure that out, analyze the instruments chart, the pair chart, and determine the potential loss. On the previous webinar, I taught how to find potential loss and potential profits by putting on the chart support and resistance. You can find the record of this webinar on YouTube. All right. So after you know how much you're willing to lose and you know what is the potential loss of the trade, and let me say that after a while, as you will grow as a trader, you will have the same trading ideas, the same techniques that you will adjust to yourself. You will have a character for your trades. For example, I never do intraday day trading, and a trade with stop loss of 20 pips and another trade on the daily chart with 200 pips. No, I always trade on the daily chart, and my stop loss are always something around 100 to 150 pips. So it's almost constant. So this allows me to use the same sizes. Now, so as you see here in this example, let's say that the maximum loss that you can take per one trade is $300, 300 euros. Now, and you find out that the potential loss of the trade is 100 pips. So the size that you should use, $300 divided by 100 pips, which is 0.01, it's 30,000, which is 0.3 lot, standard lot. This is very important thing. It's pretty simple calculation, but it's very important for you. It's basic, actually. You need to know how much lots you use for the trade and how much money, what is the damage that this trade can cause you. Is it clear? Any question about the way that I calculate the size that I use for my trade? All right, I ask myself, what is the maximum loss per trade or per day? What is the maximum, what is the potential loss that I estimate for that trade? I divide it, and the outcome is the size that I should use. Good. Now here we can see the daily chart of the Aussie versus the US dollar. The plan was to open, it's from 6 months ago, but the trade idea is the same. Those of you who read my daily analysis know that I have a certain way of trading, and so it doesn't matter that this example is 6 months ago. So this is the Aussie versus the US dollar, and the plan was to open a position if the Aussie would broke 108. Now, as I said, knowing the levels in which you don't want to be in the trade anymore is not less important than knowing where to go in. All right, in this example, this was obviously a long position, and therefore you should look for a significant support to set the stop loss order under it. All right. If it's a long position, I look for the most recent low, and under it, I set my stop loss order. Obviously, if it's a short position, you should look for a significant resistance and put the stop loss order above it. All right. Obviously, this is just my point of view of trading. Everybody does whatever they believe. All right, so this is how I put my stop loss, and it's really important for you to have these basics rules before you enter the market, because after you enter the market, you combine feelings and emotions with your decision process, and then obviously the decisions that you take are not 100%. All right, let's move on. So we talked about the stop loss, and obviously we need to know what is the potential profit of a trade. Now, why is that important? Another aspect that you have to pay attention to is the risk reward of a trade. The risk reward means actually what is the relation between the potential loss and the potential profits of the trade. How many dollars I can get per each dollar that I risk. All right, in order to find the trade's risk reward, you have to estimate the trade's potential profits and loss, as I said. Again, you do it in the same way for determining the stop loss order. If it's a long position, look for significant resistances in the daily chart or any chart that you make your decision according to it. And if it is a short position, look for significant support. All right? If it's a long position, you should look for significant support. Why? If you believe that the currency is going to slide, I mean, somewhere it's going to get the support. And this support can be the end of the trade. So you got to realize and spot this strong or significant support or resistance if it's a long position. All right. So then you will know the potential profits and the potential loss. The minimum risk reward that I usually look for is 1 to 1.5, 1.5. Meaning that I want to see the potential of gaining 1.5 pips per each pip that I risk. Now, I sometimes enter a trade with risk reward less than 1.5, but only if it looks really good. Now, for example, let's say that you find that the trade's potential loss is 100 pips and the potential profit is 200 pips. The ratio would be 2, right? So 2 is bigger than the minimum that I set, which is 1.5. Obviously, you can determine your own minimum limits for the risk reward, but this is the average, and I think that you should take this number as it's a good number to follow, good ratio to follow. Now, there's something that you have to realize, which is important point about risk reward. It is important to understand that you do not determine the risk reward by yourself. The chart will tell you what is the risk reward of the trade, and you determine whether it is okay for you or not. Don't tell yourself something like, oh, I see the potential loss is 100 pips, and since I need a minimum of 1.5, I will set a profit at 150 pips. This is a mistake. As I said, you need to get from the chart what are the trade targets, what are the potential losses, and then you calculate the risk reward of that specific trade. If it fits the minimum that you said, great. If it's not, move on, or maybe you can enter the market but with much lower, smaller size. All right. So here we can see again the chart of the Aussie versus the US dollar. I wrote this trade idea in my daily analysis, as I told you, and the trigger for the going in was 1.08. The stop loss order was set around 106, and the limit orders, which are the taking profit orders, was set around 1.11. Now I knew these targets before I entered the position. All right, it's really important. I knew this before I entered the position, and I figured that the risk reward was around 1.5, which was appropriate according to my standards, and that's why I sent this analysis to Sunbird's clients. So as you can see, the trade worked exactly as I planned, and it gained the 300 pips that I wanted it. All right. Any questions so far? I talk about simple things, but they are really important. If you acquire these basics of money management, it will make it much easier for you to earn money. Good. Let's move on. So one of the things that guided me in trading during the years is trying to make trading as simple as I can. In order to make things simple, I work with partial sizes, meaning that when I take profits, I don't close the whole position. I realize just half of the position, and then quarter of the position, or even eighth of the position if it's a really successful trade. Sometimes I even close just half of the position, half of the way to the stop loss level, but I will talk about later. Now, working with partial sizes, I mean, why do I do it? What is the advantage here? So the first thing, it helps you to get over greed. Sometimes we don't take profit just because we want the currency or the trade to keep rising and give us the maximum profits. What usually happens is that the currency changes its direction before we took the profit, and we end up losing or taking just smaller profits. So if I realize partial profits, I ensure some of the profits, but I still let the trade grow with the other half. And I still take the advantage of the full potential of the trade. Another thing that it helps you is that it reduces the fear of saying that the trade is going to turn over any moment. You know, sometimes when we are in a trade and it's winning, we're afraid that it's going to go against us any moment. So after you set the first target for profits, you can realize half of the position, and then, well, sometimes I move the stop loss order to the entry point, and sometimes I don't. I will talk about later. But the thing is that I work with partial sizes. Now, I know that for some of you it sounds strange, but if you look at it, this is the key for you to survive the trade and take advantage of its full potential. All right, let's move on. All right, so there are many ways to manage a trade, and this is really important. Each trader has his own approach for this matter. Though some traders do not have a real plan, and that is one of the crucial mistakes that causes losses. If you don't know where you are going, it doesn't matter which way you choose. Albert Einstein said that. So you have to have a plan for any trade that you take and get prepared for both winning and losing scenarios. I will start talking about what we all hope to have as much as we can, which is actually winning trades. Now, as I keep reminding, it is important to understand that I talk from my own experience. And the trade management that I will discuss now works for me, but you don't have to agree. I mean, the most important thing is for you to take from this webinar is that you will have any kind of trade management strategy. Otherwise, you will get lost. All right, so the first thing that I think about when I open a position is to take partial profit. All right, as I said, I want to take my first partial profit, and then I move the stop loss order to the opening price. The reason for that is that I actually want to lock the trade in the safe zone as soon as possible. This is the most important thing for me. I want to lock the trade in the safe zone, take half profit, and back to normal, back to be calm again. All right, relaxed. This is the more important thing. You have to be relaxed. By the way, I never open two positions on the same time. I mean, if I just open a position, I enter a trade, until I don't get my first partial and I don't move my stop loss order to the entry point, I never open another position. All right? The reason for that is, you're enough nervous with one trade. So trading multiple trades makes it much more difficult for you. So don't open another position until you are safe with the first one. All right. So as I said, I want to take my first partial and move my stop loss order to the opening price. And obviously I'm dependent on the market, but as soon as the market gives me the opportunity, I take it without hesitations. I mean, I work like a robot. If I have the trading plan and I know what are my targets, if the price reaches this price, I immediately take profit. All right. So as I mentioned a few times before, in order to avoid the human nature that might prevent me from taking profits when I should, I set golden rules that help me to act almost automatically in certain cases. Therefore, I take the first partial profit or half of the position when the trade reaches to the distance of 1 to 1 from the potential loss. For example, all right, let's say that I analyze a pair, a currency, and I found that the potential loss is 50 pips, all right? And the target that I set for the trade is, let's say, 100 pips, all right? Now, as I said, I work with partial profits. So the first target that I want to take, that I want to reach, is the distance, the same distance between the entry level to the stop loss. All right. So in this example, I want to take profit of 50 pips. Now that raises the questions. I mean, I just 10 minutes ago I said that I want to keep risk reward of 1 to 1.5, and now I'm talking about 1 to 1. So the answer for this is actually that I'm taking just half of the position on the distance of 1 to 1. And there's another answer, which is how to manage a losing trade, which I will discuss on my next slide. All right. So I take my first partial after reaching to profits of 1 to 1 to the stop loss. Now, if the trade is really successful and keep gaining pips, I might take smaller partial profits, such as I said earlier, something like eighth or quarters, right? And I move, after I take my profit, I move the stop loss along the trade. What do I mean? All right, let's take a look here on the silver chart, which is another trade idea that I sent to our customers, to Sunbird customers. The idea was here to open a position, and the stop loss, the original stop loss, is here, as you can see, and the trade worked really good, and it reached all the targets that I set on my original trading plan. And as you can see here, I moved the stop loss orders up with the trend. All right. As I said on the beginning of this webinar, each time that I get a new significant support or low, I move my stop loss order to this level. It's pretty simple. All right. You should see it by your eyes. I mean, in time you will be enough experience to see that a new low was created, and you should move your stop loss order to that point. So the silver kept rising, and we took profit here on the first arrow, and then we set here the next stop loss, and we managed to take another profit before the price slid under this new stop loss. All right. Everything that I talk about is pretty simple to understand, to realize. It's hard to implement though. So this is the hard work. I mean, it's not science. It's pretty simple. You need to follow these rules, and just like a robot, if something happened, check what the rules say and follow them. All right. Here it's another example of a short trade idea, again, that I sent to Sunbird customers. The entry point was here. It was a short position, and the original stop loss was here. All right. And this was on times when the Swiss was amazingly strengthening against every currency. And so we set new stop loss orders along the downtrend, and actually we made a lot of money here. All right. Great. All right, questions. What do I mean by I have opened positions 2 times in silver? No, I didn't say that I opened 2 positions. What I said is actually the opposite. what I said is that I never open another position or a new position until the current one is either closed or safe. Safe means that I put some of the profits in my pocket and I move the stop loss order to the entry level. Sometimes I even move the stop loss order to the entry level without taking profit. I mean, this can happen if the price, from one hand, did not reach my first target, but on the other hand, it did create a new low. New low, which means that I can move my stop loss or higher if it's a long position. All right? Anup, does that answer your question? All right. So now we discuss how do I manage a trade, a winning trade. Now we should discuss what happens if our plan doesn't work as we estimated. All right. So one of the things that keeps me green in the market is the fact that I know how to cut my losses when they are still small. All right. I said that on the beginning of the webinar, is that you should cut your losses while they are still small, while they are still young, and let your winning trades breathe. All right, so I have specific guidelines that I follow almost automatically, so I don't let the human nature to disturb my plan. When a trade is not working and it moves to the negative territory, I don't wait till it gets to the original stop loss level. What I do is I get rid of half of the position and keep the other half till the stop loss level. I mean, this is not a pure technical analysis method, but this is how I see things. If something don't work, I will try to reduce the risk, but I will let the other half to play according to the technical analysis principles. Sometimes, even if a trade is just playing around the entry level, I consider selling half of the position or close the entire position. You know, if it's playing around the opening level for several hours and it doesn't work for me, or several days if it's a swing trading, then sometimes I just close it. So obviously it does not mean that you don't need to be patient, all right? Patience is really important in trading, but in time your experience will tell you if something wrong with a certain trade idea. So again, and this answers the question that I raised a few minutes ago about the risk reward issue. I mean, from one hand, I take partial profits, all right? And on the other hand, I never get to the original stop loss level with the full original size. I always cut half of the size, half of the way to the original stop loss. Again, this is not a pure technical analysis method, but it's a great money management that worked for me. So you can adopt that, or you can do anything else you like. But this is how I think things. So to conclude, we talked about several things. We talked about how you should calculate your size, the size of your trade. We talked about that you have to put a stop loss and how do you move the stop loss along the trade. We talked about partial profits and how do we manage losing and winning trade. And this is pretty simple. As I said, it just no more than 5 rules that I follow along with my technical method. And again, knowing how to analyze charts with the perfect technical analysis is nice, is okay, it is necessary, but it is not everything. If you just use many indicators, technical indicators, but you don't know how to manage your money, how to fill your money, you will lose it eventually, right? I can tell you that a trader that, let's say, doesn't have the most perfect technical strategy, but has a good money management skills, has much better chances to survive the market than a trader who trade like it's a jungle and has a good technical analysis skills. So money management skills are much important than technical analysis skills. This is my point. All right, this is it basically. Pretty short, pretty simple. Any questions? All right. What did I mean by solid, strong breakdown or breakup? All right. So this is an important question, and I think you asked this on the previous webinar. The question is, all right, Bastian, you say that you look for significant supports or resistance, but how can I avoid from false breaks? That is a great question. The answer is that I will discuss it on my next webinar, or another one, I think, which is my favorite forex trading. Now, in short, I say that, as you can see here, what happens usually? I mean, amateurs, they look for opening a position in extreme points. They usually enter the trend almost when it ends. I like to search for reversal patterns, bullish or bearish reversal patterns. And as you can see here, my entry level here, it is hard for your eyes to realize why did I decide to enter here, which is for unexperienced trader, it looks like I actually got in the middle of the trend. But my plan is to get in before everybody does, and get out when the mass get in. So I will discuss reversal and technical and my technical and how do I see things and my favorite strategies on my next webinar. All right. So, but my best advice for you is, first of all, you can read my daily analysis every day, and I talk about it almost every analysis, and I demonstrate extreme points in which many traders get in, which is actually a trap. All right? The secret is not to get in extreme points. If you know how to spot them and how to spot reversals that come after corrections, this is, from my point of view again, is the key to make money. Otherwise, it's sometimes you lose, sometimes you win. If you, I mean, when you open a position just on breaks up and breakdown of supports and resistance in extreme points. All right. I hope this helped you. Again, I will talk about it on my next webinar about my favorites for explain. Any more questions, guys? Well, I still don't remember it because I didn't receive this email from you. So you can send me an email or to our sales department, and I will reply. Well, I prefer that you send the email to the sales department because sometimes I get a lot of emails, so I don't want your email to disappear. So sell it to the sales department, and they will ask me, and they will reply to you. All right, I promise. What is intervention of banks in forex? Um, well, simply as it heard, intervention is when a central bank decided that. All right, thank you very much, guys. I will end the record and then I will answer your question. All right, thank you. Have a good night.